yeah, you had a couple of candidates you were looking at. Which one did you want to bring to the show here and kind of show us?
We're gonna go with DKS, Dick Sporting Goods. Cody, first of all, you're talking about covered calls, and this is kind of like what my mind map is when I look at covered calls. I have to first determine is it going to be a quick trade?
DKS.
DKS,
I'm
Cody.
just out for the cash flow, DKS, or is it an investment? So that's first of all, that's my first part of the whole process. Is this going in my IRA, or is it going to go into my margin account? Because that will determine how much I'm going to spend on it, right? So that's the first process. So I'm going to give you both the analysis, and you guys tell me. So if I'm going trade, I'm looking at a margin account. So this is a $59 stock. So you're looking at about $29.50 if you did it on margin. So if I'm doing this as a trade, I'm looking at DKS. I had a nice little breakout today. It's got that old resistance level at 63.30. That's what that's where that old resistance level is. So I start going through my process. I go to the trade tab and I start looking at my options chains. Now this has good volume and it has weekly. So I like that it has weekly. So I'm going to start up with that 31-day, Cody. Now, if I'm going for straight up cash flow and we just go with our typical covered call rules, we go with the 40 delta, that would put me at the 61.5 strike price. However, knowing that I have that resistance level at 63, I might just go out a little bit further because if it does continue to run up, I also want to capture some of that appreciation as well. So I'm not just going to automatically cap myself at 61.5 if I know that it's breaking out. So I'm going to look at that 63. I'm going to sell that for $1.15. And if I ran my numbers right, it was actually, was it $1.15? Yes, $1.15. So if I run my numbers right on that one, so 63, well, when I did this earlier, it was $1.52, but it would be a 2.5% ROI.
Yeah, you can still get $1.50 in here.
Yeah, because those been,
the bid 140, the ask 165.
It's $1.52. I'm sorry, I was looking at Cody's last price there. So yeah, it would be $1.52. And that would put me at an ROI of 2.5%. Now, this is a dividend payout stock. It's got a PE ratio of 13. So even if I went investment side, I could still pan out a trade where I can kind of give myself more time and let the trade play out. So if I was just going cash flow, this is what I would pick. I would do the 63, get my $1.52, 2.5% ROI in 31 days, call it a day. If they take my stock away, I also get the appreciation. So what, $500 total? If I get the appreciation. If not, I get to keep the cash flow and do the cover call again next month. It continues being a cash flow trade. Now, if I'm putting on the investor hat, and I don't necessarily want to have to micromanage this, and maybe I want to hold on to the shares. I don't want to cry like Cody if they take them away because, we made money, right? So if I'm looking at the investment side of it, I'm not going to necessarily go and look at the weeklies. I might go out and look at the monthlies. So that would put me out at the 45-day one. So that's a little bit outside of our window, but still right in line with where we are. Now, it doesn't give me a whole lot more deltas to pick from, but I want to look at that 65 one. Why? Because again, we know resistance is at 63.5. And if it breaks out at 60, that means it could get to 65. So that gives me a little bit more time in the trade where I don't have to necessarily worry about having to roll that call option if I had to, because I want to keep the shares or any of that stuff. I can just kind of let it sit there and just kind of do its thing. Now I'm going to bring in a little bit less ROI, but it is a dividend paying stock. So that covers for what I'm going to get in my cash flow. And that's how I would go about doing a covered call with a DKS. So if it's an investment, I'm just going to shoot for the cash flow, and then look at the chart as well. Look at, we talk about the 3 C's of cash flow, right? You look at the chart, the cash flow, and the cushion. And, you want to make sure that you give yourself enough cushion, make sure that you're getting enough cash flow to meet your standards. I always go for at least a 2% ROI if it's not a dividend payout stock. If it's a dividend payout stock, I'll go a little bit less because it is paying a dividend. So, you look at the chart, it's, been slightly bullish. Now it's kind of been sitting sideways. It's trending upwards today. Nice green candle today. Perfect trade for a quick 30 days or a long-term investment.